Capital budgeting is basically evaluating and selecting a long-term investment which maximizes the investor's wealth. So in capital budgeting, you will evaluate the investment proposals and you will select the best one so that the very objective of maximization of investors' wealth is achieved. A capital investment would basically involve initial cash outlay and inflow will be over a period of years. So you are taking a big risk because you are going to put your money now with an expectation of income over the period of years. So there you cannot take a decision just like that. For that you have to do capital budgeting. Capital budgeting would basically analyze whether the returns that are generated out of the capital investment matches the expectations of the shareholders or the investors and owners in the business. So in capital budgeting, what is done is post-tax or capital budgeting is basically estimating post-tax incremental cash flows for each project so that you can evaluate the project proposals which would facilitate selecting the proposals which will maximize the wealth of the shareholder and give the return expected by them. So in capital budgeting, you would critically focus on identifying the cash flows from the projects. So this would give you an opportunity to evaluate the various investment proposals and you can take the correct or appropriate decision which ultimately maximizes the wealth of the shareholder. So what is the importance or purpose of capital budgeting? See, or why this capital budgeting is very important. Capital budgeting is very important because in investment, substantial expenditures have to be incurred. So a thoughtful decision have to be made. A thoughtful decision means analyzing various pros and cons of the investment decision. So that's why capital budgeting gains its importance, number one. Number two, any capital investment will have long period or long time period effect which will affect the future rate and growth or direction of the company. So capital investment decisions cannot be taken just like that. It should be after a thorough capital budgeting study, and capital investments would basically irreversible decisions or investment, because once you go and commit a lot of money in major capital investment, reversing or saying okay I don't want this is very difficult. And four, capital investments and capital budgeting process are very complex because you have to predict the future events. You have to predict what's going to be your return, what's going to be a cash flow, in what direction your organization is going to move. So you are going to predict many things. So capital budgeting and capital investment is basically a complex process, so it have to be dealt in an appropriate way.